We do our real estate market update at the beginning of every one of these seminars, just to keep everybody informed on where the market's going. And what we did is we zeroed in on a couple of things. One, on the right-hand side, it's price growth. And on the left-hand side, it's the number of new listings coming on the market. And if you can see year to date in 2024, which is basically the end of February, our new listings come on the market are starting to go up a little bit compared to 2023, but we're still below the 10-year average. If you look at 2022, which was, economy's coming out of COVID, everybody's got all this cash, they're all ready to buy, and there's a lot of pent-up demand. Well, the market went crazy in that year. And then it leveled off in 2023 once interest rates started to go up a little bit. Now in 2024, people are getting used to this high interest rate environment. They're getting used to paying more. They're getting used to higher inflation, which is unfortunate. So you're starting to see the new listings come on. People are confident that they're going to sell their house and have somewhere to go. We found at the end of last year, people didn't want to put their house on the market because they had nowhere to go. If they sold, they couldn't buy another house because the inventory was zero and the rental market was just as crazy as well.
Yeah, and just speaking to the numbers right now, I was looking just before the session, we have 2,317 active and pending listings. So when you guys see that on CREP, that you have to take away the pending listings. And when you take the pending listings away, pending listings are the listings that are under contract already. When you take them away, there's actually 1,648 active listings. And out of that 1,600 listings, close to 700 are condos. So you really have to look at this. If you're in the market for a single family home, there's not much to choose from. And you know what? There's more homes selling per week right now than are actually coming on. So we're actually eating up the inventory that was maybe left over, Tim, properties that come on the market and are overpriced, or basically that would be the reason why they're still there, Tim, in this market. So even those properties are getting bought up right now.
Yeah, and then looking at the right side of this slide, we see the total residential price, that's all property groups together. It's up 10% over February of 2023. Detached, you look at that, average price for a detached home in Calgary is $721,000. We never expected this. We were expecting it to level out around $650,000, but because the inflation went so high and so many people are coming into this country, they're driving the price of detached homes really, really high. That's the average price right there. So you're not going to find, any decent detached homes below $550, or very few. Semi-detached, they're even going up quite a bit, $639,000. One thing we want to zero in on is these the condominium type housing, the townhouses and row houses and apartments. If you look at the price growth increase from 2023, 18.8% for row homes, which is townhomes, and 17.2% increase for apartments. Those increases are crazy. We based every one of our analysis, which we're going to talk about in this seminar, on 3.5% growth, because that's Calgary's 75-year average. Those numbers just blow it out of the water. So anybody who has owned property since last year, they've made tremendous equity growth in those properties. So congratulations to everybody who owns real estate, whether it's one house that they live in or whether it's investment property. Your net worth has gone up quite a bit just looking at these numbers.
Yeah, and the funny thing about the apartment prices there, we're not even back to where prices once were. We were in a condo yesterday, West End, probably 7 blocks from our office here. Tim, that condo was 2-bedroom, 2-bathroom, 1,100 square feet.
Yep.
One of our investors, he's a helicopter pilot. They're renting right now. Guess what? The landlord wants to sell because he could get top dollar. And you're going to see a lot of this because investors that have been holding onto these properties for years, and we're talking back in 2008, Tim, these prices were above where we were at. So the condo we were in yesterday, Tim, it came on for $440. It actually sold for $480 back in 2008. So you know what? Our investor that was looking at it, he's like, is this a good price? Where is the Calgary market going? I mean, this condo had mountain views, 1 block off the river in a what would you say, in a state feel kind of apartment building.
An upscale building.
Upscale building. And a property like that in an upscale area in Toronto or Vancouver would be over $1 million. So to get it for $440,000 is well below where that value is going to go. And we actually stood there and we could see that property alone, that condo, going from 440 to an average of around 650,000 over time. We don't know when it's going to happen, but with the way things are going, Tim, in the condo market, they're not building purpose-built apartment buildings. They're building purpose-built rental buildings right now. Their inventory can't catch up. And that is the most affordable price range for the majority of people that are moving to Calgary. So you're going to continue to see those prices go upwards, and you're going to continue, which is going to be good for the condo market. You're going to continue seeing properties coming on the market because investors are just going to get their money out from years ago.
And one more thing about the condos is it being the lowest priced property group, you're going to see first-time home buyers move into that, whereas in the past, 10, 15, 20 years, first-time home buyers would gravitate towards the single-family market because they wanted a yard or whatever. Well, everybody's shifting their expectations downwards. So if they've just come out of university, they've had a job for a couple of years, they start out in those condos. Whereas, they had choice years ago, now they don't. That's their price range. So they're going to start there in the lower end. And what we're seeing is that's going to drive the prices up because demand is shooting way up for those property types. Good morning. So the next part of our market update is our mortgage market update done by Danielle. Danielle is away today, but we really want her at our next seminar because the Bank of Canada's interest rate announcement is coming up on the 6th. And we feel it's going to stay the same, but they will probably signal somewhere down the line when they anticipate starting to lower rates. It's anybody's guess right now, but most of the financial experts are saying by the end of this year, rates will be down at least a full percentage point. We feel that the same way as well. And while it's going to help people afford their mortgages and it'll lower rents a little bit, it's still going to drive demand because the more affordable it is to get into the housing market, the more people are going to get in.
Yeah, so it's a bit of a catch-22. You buy now with higher interest rates. We would recommend a variable on that for sure. And you know what? If you buy later on, you're just going to pay more money for the property. And you know what? The first thing you should do if you're thinking about investing in real estate is take a photo of Danielle's information here or a screenshot. And that is the first step for anyone thinking about investing in real estate. Even if you can't get a mortgage, first step is to see where you are financially. And Danielle, we've been working with her since 2006. So she's obviously doing a good job. She's actually the #1 in her with mortgage architects across Canada. So she does a lot of volume, and she doesn't just plan to get you one mortgage. She plans to get you multiple mortgages. And working with someone that's investment focused is key to any investor out there.
Okay, so that's our update.